Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 8th of December, 2022. Snow in the forecast in Chicago. I can't believe it. They said it's not going to stick, but we're due for the snow. It's a little early for us to get real sticky snow. People think, come December in Chicago, you get that at this time of the year. You get the snow, but the ground is generally warm enough where it doesn't really pile up. Can it happen? Oh, yeah. But it's not normal just yet. I prefer it not to stay that way. I have to go out and shovel it. I have a home in the city. And the city, whether you know it or not, if you don't do your sidewalks in Chicago within hours of the snowfall hitting, you can be fined. And they do walk around and fine you. Very interesting how they do it. All right. So as we take a look at the markets, what you have here isn't what you got. It's what you're going to get that gets you where you're going. What do I mean by all that crazy talk? All right. We're going to get tomorrow, the PPI, and we're going to get the University of Michigan consumer sentiment numbers. Give us a pretty good idea. Today's number that we got was the jobless claims. It didn't go up very much. It's a snail's pace. If this is what you're looking at in the Fed to judge anything on, you're going to be disappointed because the Fed's going to have to go up and increase rates a lot more to make the pain in that. They want to see jobless claims jumping. Now, admittedly, the continuing claims are going up at a neat enough clip. It's not a runaway, but it's a better clip than the weeklies are doing. We'll see what that means. Today you had the Keystone Pipeline spring a leak. And I'm still trying to read about it and understand how serious it was. You would think at first, you hear that, remember, we get 600,000 barrels a day through that. You would think oil prices would have taken off. Oh, what's going on? Big event. You were up for no time at all, and then you were down, in fact, down hard at one point when we look at the market. You've rallied back to $72 back, so you're $71.50. So, Joe, are we buying the oil? Joe, is the team out there buying? They should not tell us. They should just be quietly doing it. And by the way, I would like to congratulate Joe Biden. I'm laughing at it because it's the trade of trades. I never thought when he released the reserves that he had the timing to pick a top in energy and now had told us that 72 down to 67, whatever his band is, he's buying it back. He doesn't know it. He's a heck of a commodity trader. Wow. It's impressive. I am impressed. It rarely happens, and I don't know that that was their goal ever, but it has worked. But why are we down that much? It's because everyone is so scared about world economies going into the recession. When America sneezes, everybody gets a cold. You do understand that. They keep saying every day we're going to see this recession. And so far, because labor is so strong, including the jobless claims, the question is how weak can the recession be? Because I'm of the school of thought, it can't be a deep recession if people can get jobs. Get no jobs, get a recession, have high inflation, you have a whole different world. That's not the world we're in right now. When you look at the S&P 500, I can make an argument that the market wants to come back to the 18-day average. You're down for the week so far, 2.73%. Okay. When I look at the action here, it's basically sideways. It's trying to get a downside bend to it. You can see where you peaked out and you've had this correction. So for 5-6 days, we've been in a correction mode to the downside. Today, you finally got the first day in, 5 or so, where you got the market up a little. But all it did is it bounced away from what number? As I've been telling you, the 100-day average and the 18 and the 200. You're caught in these averages. And you don't have to agree with my analysis, but you can't argue with the chart. Now, reports are coming out. You're going to break out of this one way or the other. I don't know the pattern. If you're asking me if I have the report, great, I don't. If you're asking me if I had it, do I know what the market would do with it? Probably not. Why? Because I've seen where these things get, and I never had them, where they get leaked, and in 2 minutes it goes one way and then it's the other. And I would imagine people get stepped on. It's very difficult. You want to see what the mentality is. Now, the importance of Bollinger Bands, you got to drive it and make yourself a New Year's resolution. You're going to learn the importance when you bring in these bands. You see how wide they were? And as soon as they started wrapping their arms around this, and I was here telling you this right through here, I think if you go back to my videos right about here, I would have said nothing. This day, I would have said, uh-oh, we're going to take the volatility out of this market. Go back. This was December 6th, okay? And see what I was saying. I said, I think you're going to narrow in this band as we get into these reports, and you want to be very, very careful. Well, you tell me what you're doing. That's exactly what you seem to be doing at this point in time. And now the reports start on us, okay? So the market has got a downtrend. Let's first understand what we have in the NASDAQ. We're in a bear market temporarily. On a daily basis, you're there, lower highs, lower lows, but you've hit the objective. You're not embedded, and what I teach is when you hit that, the pros come out of the market. But if you were embedded, they'll treat it different. When I come to the Dow, same thing. You've narrowed in the band. You've been taking them in from way back here and narrowing them in, and suddenly you're just hanging at this 18-day average every day. The Russell isn't quite in that pattern. It never narrowed quite enough, but it's been a heck of a pattern to even try to guess what it is. You're paying zero attention to all the moving averages. You seem to swing either side of them. That's okay. Market doesn't want to do it. It doesn't have to do it. Just recognize what it's doing. That's the thing about patterns. Once you understand them and the market's not doing it, who told you you can't just do this? Flip the page and go to a chart you like. That's what trading is. Now, when you look at the VIX cash, you lost the embedded reading. When you lose the embedded reading, I know what Ira teaches you, and he's been doing it for quite a while. He tells you that when you lose that, it's not going to let me do it up there. I see what it's doing. When you lost it right here, that was it. I thought you're going back to the 18-day average of closes. It's not as simple as it looks right here. All right, there are rules. There's ways that when you hit the band, you're not coming out of all your position. There are rules that tell you, hey, you hit the band, you get a bounce, you want to come in, and in a bear trend, selling more, and in a bull trend, buying more on the pullback from it. Very important to learn that. Example in hand. Slow stochastics embedded. So the pullbacks on this market continue to be the support. It's the powerhouse. Why? Because it's over the 20-year period, and people are convinced that the back end with the recession can't really add a lot of, if you will, yield to it, whereas it's the medium term, the 5-year, the 10 can add a little bit. It's the 2 and under that are going to see the Fed actions. So here you're fighting a big, important piece of information. You're fighting the 100-day average, the Bollinger Band, and you're not embedded. I want no part of something like that. I'm telling my client, you're not in that market right now. Dollar index. Tell me the 200-day average hasn't become all important. From that down to the Bollinger Band is what the market's been fighting. For the dollar to get bullish, the pattern has to be one of a settlement back over the 18-day average. To get bearish, it is in a bear one, but it's oversold. I want no part of it. I'll let you do it. Be the hero going through these reports. The odds of still settling and staying under a Bollinger Band, you only do it 5% of the time. Okay, top or bottom. You go back, look at those charts. Don't be a hero. In the eurocurrency, the resistance is the upper Bollinger Band, and here too, you're not embedded, all right? Or are you? I don't know if we'll be able to do this. Now it's not going to let me do them. I must have hit a button here wrong. But it's not letting you move around this one way or the other. Be patient. There'll be things to do with it. In the British pound, lost the embedded reading, and I'm shocked. If it makes a new high, then the pattern didn't work. And not every pattern works. But generally, you lose the pattern. You lose the embedded reading. The red line slipped back under 79. You won't make a new high before you go down for this low. The reason it's not the 200-day average is it was lost when you were already under that. So we'll see if it works or not. Bitcoin. I started telling you a week ago plus. I said the volatility is going to come out of the market. I don't look too bad so far. Take a look at how you're stuck in that Bollinger Band. You're overbought in an uptrend. That we recognized from back here when you lost the embedded reading. But when you do this, it can break out. I mean, there could be a piece of news, but it's just a sign that you want to spin and build something, top or bottom. Don't know which, with the way all these things are going. Plus, there's going to be the hearings, right? Congress wants to hold. They want to get SBF, as he's called, in front of them. And of course, he's going to say he wasn't paying attention. That seems to be the thing. He had $9 billion of people's money that he didn't pay attention. Okay, I'll leave it at that. Brent versus WTI. You got a big break in this market, and both are coming down together. So I don't think that when they narrow, it necessarily means they're just getting bearish. It sort of means, believe it or not, that Brent is following, I think, WTI, the weaker of the two. Look how you've latched onto that lower band. You're oversold. Right here, you broke apart, and you have a downtrend in this market. You keep hitting the band turning, and you might even embed soon. So energy prices are going to help the Fed tremendously. They're going to be a big factor if they stay like this for the February meeting. But they're going to play a role, for certain they'll play a role as the Fed meets in the meeting next week. And if they don't get hot PPIs and hot CPIs, they'll probably say, you know, energy's been falling, things have been falling. We go with the 50 basis points. They get a hot PPI, they get a hot CPI. This will come into the debate, and then we have to see which way do they want to go. I know if I were a voting member and if PPI and CPI were hot, I got to go for the 75 points. But if they're just so-so and showing signs of cracking, they'll probably go to 50. That's how I'm viewing what's happening. But these markets are all adding great pressure. Day in and day out in the local news in Chicago, they're talking about how cheap gasoline has gotten and what's going on with heating bills and the like. And you see that right through here. And the nat gas cost. We got too cheap. We got to bounce, but it doesn't mean that it's going anywhere yet. This is no longer a market. Remember this? This is no longer a market that was up here in September at $9. This is a market that lost 40% of its value. People don't talk about that. It's pretty important. That's a big break. Now the question is, when is the Freeport, Texas terminal going to be ready? When will the gas start being exported from there? How much are we going to produce next year? We'll look at the 16% we can send out of the country versus what we produce, and that's what I think the number crunchers are going to start doing. But you need to crunch something. You got to learn how to work with these bands when they get down there. Take a look at this. I think I sum it up in this right now. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein. on the road to your education.